These companies pretty much did everything they were expected to do and more. Recommitting to the AI trade, essentially saying that they're still enthusiastic about it. Why is the market in general not really giving them credit for it?
Look, first, I think that was a masterpiece quarter, right? And I think any worries about the AI bubble thrown out the window in terms of fundamentally, when you heard from Godfather of AI, Jensen Nvidia, look, I think it speaks, and you've talked about a lot on the show, like worries about circular financing, like where this is going to go. Can the data centers going to get built? Is there capacity issues? Look, I just continue to view when you put the pieces together of the puzzle, as well as our 3 weeks in Asia, this is third inning, top of the third, one out of this AI game, and that's why I just think names like Nvidia. Days like today, you buy names like Oracle, Microsoft, Nvidia, because I believe this tech bull market has another 2 years left.
I mean, as a baseball numbers guy, we now know sometimes the third inning is your high leverage inning, where you got to kind of bring in the best arms and try to put down a threat. And I'm wondering right now if Nvidia's numbers, and I've been kind of puzzling over this all day, as great as they are and as much confidence as Jensen has about the next 4 or 5 quarters, you wonder if everybody can have equal confidence in the customers that are giving him all that money and allowing him to earn those margins on their spend, and when they're going to sort of get clarity about the payback.
Look, it's a great point, but I would just say, look, in the U.S., 3% of companies have gone down the AI path. Europe, 0. You look at, in Asia, ex-China, minimal, less than 1%. Sovereigns, Middle East, just starting. I mean, my whole point is that, right now, demand to supply is 12-1 for NVIDIA chips. And of course, AMD and others are going to play. But the reality is that we are still early. I mean, you're talking more money is going to be spent in the next 2 to 3 years than the last 8-10 years combined. So I get some of the worries, but I believe the bears will continue to watch this AI party from the outside looking in as they continue to prove it out. And I think Street's underestimating numbers anywhere from 15 to 20%.
Right.
Next to 12
but is that not the bull case for NVIDIA and the whole food chain for the infrastructure build out? Can it not also be the bear case for the Metas of the world and the Microsofts that feel like they're on this unending treadmill of having to spend, hoping that they get the return?
Yeah, and I do think it's a little more than hope, because the reality is that the use cases, if you almost put the pieces together, look at Palantir, look at MongoDB, look at Snowflake. So you see the use cases are exploding. Look, and it's an arms race that they are having to continue to spend on, and you're going to see the same with the Oracle. But I think Meta, we look out 12 to 18 months. This was a table pounder moment, just like we saw with Alphabet as a table pounder.
Well, I was going to get to Alphabet because that's a really fascinating situation, how it's gotten revalued higher, tremendous amount of sponsorship all of a sudden of this name that people really had a lot of skepticism about not that long ago. Now, their new model is getting raves, I guess, in terms of its performance, the new Gemini. And also, they did it, kind of with their own processors. So how does that play into the whole, NVIDIA at the center of this question?
Sure. Well, NVIDIA obviously fueling its centerpiece in terms of one chip in the world, but the reality is Alphabet, you go back 6-8 months ago, New York City cab drivers bearish on it, right? So it's one, AI that is ultimately going to destruct the model. The opposites happen. I mean, I think now you see Sundar and what's happening at Google, they're on the offensive. I mean, you look at what they've done with Gemini, this is just the start, because the reality is in Cupertino for Apple, who are they going in for AI? It's just a matter of time until they do the Google Gemini deal as well.
Yeah.
So that's why you've seen that stock at continue re-rating. Bull case $400. My colleague Scott Devin and I, we've done a lot of work. Look, I believe this is one. This is a name you continue to own, just still early days.
And then when it comes to Apple, because you mentioned it's an arms race, well, they're not really participating, at least in terms of the gross dollars being funneled in that direction.
Yeah, I think I think now it comes down to, like, obviously iPhone 17's been almost a sleeper upgrade cycle, but you have the biggest install base in the world. Monetization is right now on the verge. 2.4 billion iOS devices, 1.5 billion iPhones. The consumer AI revolution will go through Apple and Cook, but it all comes down to Gemini. And now that DOJ, that has cleared, that gives them the opportunity to walk down the aisle and ultimately ink that partnership. We said that's worth $75 to $100 for Apple stock. That's why I continue to view that as just a must-own name here.
AI chips are actually useful, adding some fuel to those bubble fears. NVIDIA CFO weighed in on that last night, saying that chips they shipped 6 years ago are still fully utilized today. It's a good topic for our Deirdre Bosa in today's Tech Check. Hey, Dee.
Hey, good morning, Carl. So that's right. CFO Colette Kress, She tried to put the depreciation debate to bed, but she may have actually raised even bigger questions. She essentially said that NVIDIA chips, they last longer than most people assume, 6 years, and still at full utilization thanks to its CUDA software. But what does full utilization actually mean? Running isn't the same as creating economic value, and that is where Michael Burry comes back in, throwing cold water on the whole idea. He posted on X that extending useful life confuses physical utilization with value creation. He likens the A100 chips to airlines that keep old planes around for holiday overflow. Yes, they fly and they're full, but they're only marginally profitable, and they're not worth very much at all. Now, Jensen Huang has basically admitted this. He said last March that you can keep old GPUs working, but they become almost impossible to sell once the next model shows up. This was at GTC. He said that Blackwell, its latest generation, is so much more powerful than Hopper, the previous generation, that, quote, you couldn't give Hoppers away. He said there's only a few circumstances where they're even fine. That's the word he used, fine. Now, in the current moment where supply is tight, old chips, they will get used. But if that imbalance changes, and this is sort of the question on everyone's minds, does that value drop very quickly as well? The risk for investors is this uncertainty. If you do not know how long these chips stay economically valuable, you cannot properly model capex or margins. You can't model the AI cycle with confidence. Meanwhile, guys, I know we talked about Google's TPUs yesterday as a longer-term alternative to NVIDIA GPUs. If the market is struggling to understand the economic life of NVIDIA hardware, Google's bet is just to build its own. It just dropped Nano Banana Pro this morning, its new image model, powered by Gemini 3, which runs on TPUs, not GPU infrastructure. Investors, they continue to pile into this trade, this vertical integration story. Google shares still up nearly 1% today as the tech trade overall sort of softens.
Yeah, that's a great example. But you're right, the conversation's not going away. It's definitely feeding the short discussion. And that's not even mentioning some of the innovation that we're getting out of the likes of China, which continue to be just a series of like DeepSeek echoes, although not as noticed now.
One of my favorite topics and biggest questions amid all of this, how do the Chinese get away with spending like so much less than American model builders? I mean, it's like a 9-to-1 ratio. We're spending on GPUs, on all of this infrastructure, and the Chinese are able to create comparable open source models, in some cases beating on some benchmarks. How does that all sort of pan out? And that's another bigger question for sort of the bubble anxieties that I think is only going to get louder and raises questions also about the GPU usage.
For sure. Deirdre, thank you. Deirdre Bosa on Tech Check today.
All right, hope you're all doing well. We've got a lot happening in the AI world today, so let's break it down clearly. First off, the information dropped a report claiming that Meta is in early talks with Google about possibly adding Google TPUs to Meta's AI infrastructure starting in 2026, maybe even installing TPUs inside Meta's own data centers by 2027. Now look, I'm always careful with NVIDIA-related rumors from the information. Their accuracy hasn't always been great. But still, it's worth mentioning because we have been hearing for months that Google wants to turn its TPUs into a cloud product rather than keeping them only for internal use. So yes, this rumor could be true. But here's my honest take, even if it's true, it's not a big deal for NVIDIA. The AI market is unbelievably huge right now. There is so much demand that NVIDIA, AMD, Broadcom, Google, and a bunch of others can all win at the same time. This is not a winner-take-all situation. Let me give you a simple analogy so this makes sense. NVIDIA GPUs equals a Swiss Army knife. Super flexible, can handle all types of workloads. Google TPUs equals a surgical scalpel. Incredibly efficient, but only for certain jobs. Both tools matter. Both tools get used. And companies like Google actually use both, even though they make TPUs, they still buy tons of NVIDIA hardware for cloud customers who need flexibility. So Meta possibly using TPUs later doesn't change NVIDIA's long-term story at all. Now let's talk about something much more real. The US government is considering allowing NVIDIA's H200 chip to be sold in China. That came straight from the Commerce Secretary today. I've said this before, it's actually beneficial for the US if the world builds on American technology. Half of the world's AI developers are in China. Wherever developers are, that's where the platforms win. Chinese companies absolutely want NVIDIA chips. They would use H200, they would even use H20. The only barrier right now is Chinese government. If even a partial green light happens, it would be a big upside surprise for Nvidia because analysts have already assumed zero China revenue. So any reopening equals extra growth that nobody has priced in. Quick side note, Michael Burry launched a paid Substack. I haven't signed up, so I can't say exactly what he's saying. But people online are claiming he compared Nvidia to Cisco during the dot-com bubble. Let me clear this up with facts. At the peak of the bubble, Cisco had a triple-digit forward PE. Nvidia today has a forward PE in the 20s. That's literally normal for a high-growth company. And Nvidia often beats estimates, which means the real PE is even lower. Also, something most people completely ignore, the dot-com crash happened because companies massively overbuilt supply that nobody used. At the peak of the bubble, 97% of all fiber optic cable was dark and used. Today, there are zero unused GPUs. Everything Nvidia produces is immediately booked, paid for, and deployed. This isn't a bubble. This is a global shortage. Some parts of AI might eventually overheat, sure. But the Nvidia demand curve is nothing like the dot-com era. Let's shift to the UBS conference coming up on December 2nd. Nvidia will be presenting there, and these finance-focused events often move the stock in the short term. Just something to keep in mind. And for those worried about Nvidia's DSO or inventory levels from the recent earnings report, seriously, breathe. DSO was 53 days. Totally normal. A lot of networking companies tied to AI buildouts have 60-70 plus day DSO. And as for inventory, Nvidia is preparing for massive Blackwell Ultra ramps and the launch of Rubin in 2026. High growth plus high demand plus next-gen launch cycle equals rising inventory. It's healthy, not concerning. Now, big picture. I have no idea what Nvidia stock will do this week or next week, nobody does. But long term? The runway is still insanely strong. Most analysts are still underestimating how big Nvidia's future businesses will be, especially physical AI. Nvidia's CFO literally said physical AI unlocks a multi-trillion-dollar opportunity. And when you look at the pieces, Nvidia trains the AI models. Nvidia simulates them in Omniverse. Nvidia powers real-world inference on robots with Jetson/AGX. Over 2 million developers use the Nvidia robotics stack. This is a full, end-to-end ecosystem. And almost nobody is pricing this correctly yet. I personally think that by 2026 to 2027, physical AI will start becoming the center of the narrative, and Nvidia is miles ahead of everyone else in this space. Plus, Nvidia's roadmap is the strongest in the industry. Blackwell Ultra ramping right now. Rubin in 2026. Rubin CPX in late 2026. Rubin Ultra in 2027. Feynman in 2028. And Jensen expects $3 to $4 trillion in AI factory build-out by 2030. That means Nvidia still has years of growing demand ahead. So no, this is not a bubble-bursting situation. This is one of the strongest secular growth stories of our generation. Stay calm. Stay long-term. Don't let short-term noise shake you out. Thanks for watching, and if you got value from this breakdown, consider hitting the like button and subscribing. It's free, and you can always change your mind. I'll see you in the next one.